Ladies and gentlemen, welcome to the very exciting Sofi Weekly. Right, Tevis? Yeah.
Yeah.
And the great and powerful Roy Crossroads. How you doing?
Doing well.
Crossroads Investing. Sorry, I should get your name right.
Yeah, it's fine. Either way.
You got a Robin Hood shirt on. Are you that's just what was clean laundry, or you got something to tell me?
I mean, basically it's whatever was on top. And I'm like, hey, I made a couple of videos today and I'm like, I'll just keep wearing this shirt. They're like, I'm not going to change my shirt for Sofi Weekly. Like whatever I have on, that's what you guys get.
There you
if
go.
I had a Sofi shirt, it might be different, but nobody has those.
I'm getting, just as the things go on, I'm just getting more and more merch. And so like more of my shirts are company shirts, all but Sofi, by the way. The only Sofi shirt I have was printed from like a friend of mine that wanted to see more Sofi stuff in the thing, but I'd love some Sofi stuff. So Tevi, baby, what are the topics for the day?
I have no idea, bro. We didn't even have a lot of news today. There's a Galileo news, but other than that, we don't have a lot.
We got institutional holdings.
Yeah.
That's a fun one. We have Galileo, which I had a lot of very interesting ideas on that. I'd like to hear if you guys think it's as big of a deal as me. If people don't know what we're talking about, well, first, let's jump into this. First of all, here, bear with me. Institutional trading volume. Oops, sorry. Just don't know how that happened. Okay. Institutional trading volume for Sofi is now hitting all-time highs, but yet the stock is not hitting all-time highs. So which one of you guys is selling? Huh?
If Tevis was selling, the price action we'd see would be like $30. So it's clearly not Tevis. Tevis is probably buying, and that's the problem. Well, I'm not selling either. So, if I didn't sell at 18, why would I sell now, right?
Tevis, be honest.
Yeah.
Are you buying?
Sofi?
Yeah.
I think if my cash secured puts get assigned, then I will be buying for sure.
Yeah,
I'm not buying
on
the open. Dude, ever since I started doing the wheel, I like buying on the open market. How pedestrian.
Yeah, it's a waste of your time.
Why would I do that?
Yeah. No, I think you've got a thing going now. Like, is that a Celsius or an Alani? What was that?
It doesn't matter. They're one and the same now. I got one for the show. Honestly, one of the big reasons I look forward to these shows is because like I save my 1 Celsius of the day for the live streams. And
you have one every time?
Pretty much, yeah.
Yeah.
But it's only it's my live stream drink, and that's it. Because I don't want to have more than 2 a day. And I definitely don't stream every day. So
yeah. I actually I tried the Alani News when I was researching Celsius and thinking about it as an investment. And somebody queued me onto this as a competitor and tried the drink. I'm like, yeah, it tastes better than Celsius. So
I like them
but that's
both.
why we're here for Celsius Weekly, right? No.
I like them both. I have Alani in the fridge right now because I drink whatever my girlfriend gets, and if there's a deal at Costco, that's what she buys. So right now we have, actually, I don't think it was a deal, but it was like a new flavor that they brought to Canada. So yeah,
they're definitely doubling down on that feminine health twist. Those two were very closely related. I actually bought some energy drinks. I consider this the weekend, and they were on sale 60 something cents each. They taste like they're worth about that much too. So I don't even remember the name of them. They were worse at Celsius. And yeah.
Jeez. 60 cents. So what is that? $4 a can Canadian?
In Canadian, yeah, $4 or $5. Yeah. But on days like this where I had some hedges in place, and so my portfolio didn't do terribly, but it wasn't a good day. by any means. I'm like, you know what? Let's save some money on energy drinks. So feels
Yeah.
bad.
Um. All right. So let's talk some co-branded Galileo, huh?
Well, before we do, like on a serious note, like the institutions, like that's just great to see, and I think we'll continue to see that as time goes on. Like, I think part of this too, and the reason why we see that big tick up, which it's still very much a retailer in stock, is that the loan platform business is very easy for institutions to understand versus like the tech platform. That's something that they've never really understood at all. So I think that as a loan platform really continues to accelerate and it shows the differentiation that SoFi has, I think that we'll see institutional volume ownership continue to spike up. So uh,
Easier businesses to understand.
very easy, yeah. Like they know how to value it too. Like that's the other thing is it's not like that they have to. And that's the hard thing about the tech platform is like how do you actually value this versus like its potential, where it's at, the revenue it gets. We don't know. Like it's hard for us, and so institutions. I think usually, I think that's part of the reason why in most of their write-ups, if they don't mention it or they don't build it into their actual price targets at all, just because they don't know how. And I think that the clearest that I ever saw was maybe a paragraph on the valuation of it, and it was assigned $1. Versus like the loan platform business is like, okay, we have businesses that basically operate on this. We can extrapolate and look at this and really add value. So I think that as exciting as a loan platform business is anyway as a product, like it's a great thing if you want institutions on board with a stock and also for higher price targets. So like if over the next 3 quarters, which I think that we'll see, that continues to accelerate, they sign more and more deals, they have more and more volume going through that. I think that the street might actually get really excited about SoFi in general.
I
Doesn't
also
look
think
like it,
so.
but
I
yeah.
also think so. I think that 2025 is the year, and I'm not putting any more delays on it. I mean, this is it.
Oh, yeah. Yeah, I agree. Yeah, this is
Um,
gonna be a stepping stone into 2026, which, they're wanting those PSUs and the loan platform business is really how they get there.
yeah, well, that's important, right? I should highlight that. Whenever I say this is it, I don't mean like this is the end. I mean this is the beginning. 2026 should be much better, and then 2027 is also from their projections. They did actually guide for that, which was 25% EPS growths on top of their guide for 2026. So going forward should be good. Now, Galileo enables brands to offer co-branded debit rewards cards. What is this, Tevis?
It's exactly what it says, Tanner. Galileo is enabling brands with co-branded debit cards. I saw your video earlier today where you were talking about the airlines and you were talking about the hotels and all the debit cards that they offer, and that this is a big deal for Galileo because they have a large installed user base. And you're trying to pick on me because I'm answering the audience and engaging with my chat. I mean, look, I think it's good for Galileo, right? I think it's good for them to expand out of fintech and traditional financial institutions, legacy banks, and go across multiple verticals. I noticed Derek White also mentioned the airlines on that LinkedIn post I posted earlier this week. So that's going to be really interesting to see because SoFi doesn't name drop any of these customers, and I understand why. I actually got a comment on on that post, I think, where the comment said like, why even after Wyndham dropped SoFi's name in their earnings call, does SoFi not like make a post about them and Wyndham? It might be something that they're restricted on, but the point being is I just found out for the first time this week that they had airlines in their roster. And like that obviously makes it a much more dynamic, addressable market that shows a more versatile product offering in Galileo for their co-branded cards, because then you can imagine a much larger addressable market because they can do this across all kinds of verticals. You're not limiting your thinking.
Yeah, yeah. Roy?
I mean, it's a good thing, but it's we'll just have to see how it performs and who onboards. And we don't have a lot of clarity on that, but Yeah, it's another credible add to Galileo. I think they continue to do well, but
you don't think that we're going to see a flurry of signups for this?
no. No, the thing is there's a lot of competition in that specific area. So unless SoFi is doing something that's just incredibly differentiated from the other players in the market, I just don't. I think that more and more are going away from debit card into credit, and maybe there's a little bit of pause on that just because of some need for regulatory clarity. Especially with Trump's uh, comments as it relates to interest rates and credit cards. But yeah, I don't think it's much of a big deal. It's always good, to see, but it's a small piece.
Personally, I think that it's not that they are even looking at a movement from credit card to debit card as much as I think that this is just an option for the 40 plus million Americans that potentially don't have the option to get the credit cards, or many, many different cards. So for me, I don't believe that there's been an easy option to offer a co-branded or rewards type debit card, and now there potentially is. And now we're already seeing it from the largest hotel by number of hotels in the United States. I could see this being expanded through all of the hotels, all of the airlines, and then also think about large companies that also have this service, like Costco, Amazon, Walmart, Starbucks. Target, for example, was another one that I was really interested in them potentially getting this. And then as I was looking up, they already have it. And I just don't know why that this isn't more broad based. You have a credit card, you have a debit card, and the perks are not as good. Like you can see the credit card one, which is the check mark here, offers a little bit more spending outside of the target sphere, but the 5% off is across credit and debit. So it is essentially a free add-on for these companies to add on these debit cards. And I think that this would be a major loyalty add for them. And you don't even need to have a specific checking account. You just connect it with any United States bank account that you already have, and boom, there it goes.
Yeah, I don't. I mean, it's fine. I just don't really see a push by most businesses, especially airlines, with debit cards. It's nice that they have them. I'm sure it's nice to have that option if somebody asks, just because it does buy loyalty as far as people actually want to use it, so it increases spend. But the push is always credit cards, always, because it's a lot more lucrative for those businesses.
Yeah, but why not offer the back end credit card if they can't have access to credit?
The back end debit card if they can't have access. Yeah, I just don't think it's a meaningful driver. Is what I'm saying.
Yeah.
That's why, like, I mean, like you've flown before. Maybe it's just only the airlines that I'm flying on, but every single one of them has a spiel at the end, and they have flight attendants go around and say, "Hey, if you want to sign up, the special offer is happening, and you get extra miles on top of it. You just sign up here." They don't do that for debit cards, and there's a reason for it. It's a lot more lucrative what they're doing, even with what they're giving away with credit cards.
I know, but I think you're missing my point though. There's not everyone can accept that offer. It's not like a cheeseburger or something. Like some people have bad credit and they can't accept that, you know, offer from them. So a debit card just filling in those gaps is like potentially 20% of the 10-20% of the market that just doesn't have that offer opportunity. And so
Yeah,
do you just want to let those customers go by, or do you want to fill that gap?
I just don't think it's a big deal. I
Yeah.
mean, there's already, like, think about it with what PayPal offers. Yeah, you have the 543, or is it 531? No, it's 332. Whatever it is. Like, there's other credible debit cards that are just good everywhere, no matter where you go. Debit cards like make the most sense with something like a Target, where you're doing multiple spends over a long, all the way through the month, like throughout the year. Maybe you go there like 20 times, versus like an airline debit card. How many times are you actually going to use that?
Yeah, but
twice.
you could build the loyalty points on spend either if it's on platform or not.
Maybe.
Like, I don't know. It doesn't have to be the same level of reward points. I'm just thinking like right now the rewards for a debit card are non-existent. And so if you're even building rewards at 1/5 the rate, I still feel like people would take that offer. Or because they're already financially potentially not sound or they don't care about building credit, that they wouldn't necessarily look into those products either way.
Yeah, I think that's kind of the issue is that those that would most appeal to are those that wouldn't qualify for a credit card anyway. But there are also those that don't really have the extra money to spend. And the problem is like you also have a kind of a newer product, at least here in the United States, in the market that's continuing to grow with popularity and access, and that's buy now, pay later. And people can access that, readily. And there are some rewards with buy now, pay later too. And I don't see a big push for debit card. Could be wrong.
What about so you said it works for Target. What about for the Costcos, the Amazons, the Walmarts of the world?
Oh yeah, like I could see that when it's like a regular spend category and opportunity versus like a cruise line or an airline is like it's not meaningful.
Right, right. Well, Wyndham Hotels thinks it's meaningful. I'm just saying.
Yeah.
But could Galileo potentially land a Costco of the world or a Amazon of the world?
That's the dream. I mean, that'd be great.
All right. What other topics would you guys like to cover?
Boy, it was a quiet week in SoFi. I don't know of anything else that I'm remembering that struck out to me. But we could talk macro if we wanted to, or you could talk about where you went on Monday.
Sure. I went to the Shift 4 conference. That was amazing. Amazing. It is actually like I am dying for SoFi to do this for our audience so then I can meet the teams behind the credit card businesses, the personal loan businesses, because I was just going all over talking to all the employees there, and you really get to understand who's behind the business and how they think. I was getting into it with like people who are really into payments about how AI is going to affect auth rate optimization, Roy. Like stuff that you would just fall in love with. And it's very interesting to understand why authorization rates are not always standardized or why it's messing up. And to hear how it comes through, which is essentially like CSV files coming through. And if, all these different payment terminals are all in their own language and potentially, one is using double space, but their terminal only reads in single space, then it'll decline the purchase. Like all these different types of things that can affect this, AI might be able to optimize that. Just hearing all about this was very interesting. But yeah, in terms of Shift 4, actually, I'm going to be increasing my position there. I think that my understanding from everyone that I spoke to was Jared has kind of been in an advisory role for a little bit now.
Yeah.
And that Taylor is he's been running the show for a long time. And I'm very excited about that business.
That's good to hear. So as far as culture, like you got a feel of it because you got to interact with a lot of those folks. Would you rate Robinhood or Shift 4 culture as ahead of each other?
I think I would place Robinhood slightly higher. I would say I spent a lot of time with the strategy team there.
Mm-hmm.
And they are A+. I find with payments, especially for like the Shift 4 thing, what you'll actually find is a lot of these guys are very, very introverted. So it's hard to get a lot of the culture and excitement whenever they don't like talking to humans and they'd rather be behind a computer right now. So there was a lot of that. I found Robinhood to be a little bit more personable But the strategy team was on, and they are really the team behind their M&A strategy, which is Shift 4. Like if you guys follow Shift 4,
that's their model.
It is the company.
Yeah.
And actually, did you see that they acquired Global Blue?
I did, yeah.
Holy crap. Like this is super exciting. So
they handle, and I think maybe it's a culture and leadership thing. Like Robinhood, they handle acquisitions very, very well. They integrate them into the fold. They use that business incredibly well, and they don't silo up. So I'm guessing that I think that mostly has to do with culture and leadership, and I think that's maybe why PayPal failed on so many of the acquisitions, and why SoFi is maybe not quite at that same level with their acquisitions. Like it's good, like Galileo and Technisys, great idea, but like the integration and everything just doesn't seem as quick or as seamless. Now it is a higher scale. It's a different scale because it's not just that they're integrating it to sell, to others and onboard them on the tech platform, but also put all of their technology on that tech platform as well. So not a completely fair comparison, but I think that's one of the coolest things about being able to interact on that level with investor type days or whatever they call them. It's one of those reasons why I think it'd be good that SoFi does that at some point. You don't have to do that every year. Like PayPal, they're on a thing that maybe they do that every 5 years. That's fine. Like I don't know, like with Shift 4, it may not be valuable to them to do this anytime soon, but
they do it every 3.
Yeah. I don't know. I'm glad that you got to go. And it's one of those things where I'm like, man, I think that we'll see a lot more companies do the same and allow a lot higher level of access for retail folks, not just us, but regular investors too. And I think SoFi will be late to that train.
And also, there were a lot of analysts there that cover SoFi, and I was talking some SoFi there. I don't know if I should say some names. Here, wait. Let me put this in the chat with you guys. I don't know if I spelled that right, but
I don't know who that is.
So
yes, you do.
I do know who that is.
Of course you do.
Yeah.
It's like for the people watching, it's not that exciting. It's exciting for Tanner. It's just
what do you mean, dude? What do you mean? He has this. He has that price target.
Not that exciting, bro.
So was there any, since you were talking SoFi, what were some of the takeaways that you got from some of the other analysts? Are they? I'll just leave it open ended.
Yeah, honestly, to be honest, it wasn't like that. I mean, I walked up, said I was a big fan, took down some contact information, asked them to come on the podcast and explain it later. So it's not like I was spending a lot of time talking about SoFi. A lot of it was Shift 4, but we could be learning a lot more if some of these guys actually come onto the show. Which I actually do have one of them that will be coming on next week. So
very cool.
This one here, wait, I'll message you guys. I'm sorry, guys, because I can't. I don't want to put it in yet if it doesn't end up materializing. But
I mean, that's not okay.
Why are you such a hater today? You're not in a good mood. You're muted.
That's why.
What?
Yeah, no, I agree. That's it does. It's still cool though. And you guys will see who it is and you'll be like, oh, that's why they reacted that way. So it's cool. It's because it's Gary Gordon. And we're just like, come on, man. Stop having, no, just kidding. It does. I'm actually kind of curious though. So maybe talking about macro, we can shift in that direction. How'd you guys do today? Portfolio down a little bit?
Yeah, a little bit. Yeah. It's no DeepSeek day. DeepSeek was Monday morning. That was god awful. But this isn't good. But it's fine. I'm sure Tevis with the hymns is doing. Oh, and you, Roy, are doing
I think my portfolio was down like 4.5% today, so it wasn't too bad. But a lot of that was due to hedges. Part of the hedge was cash. Part of the hedge was unintentional and having underwater covered calls, some of which are no longer underwater, which is awesome, and I like that. And then, of course, block, shorting that through puts, not directly shorting, but oh man, Jack really delivered, and I love it. I was actually, I shouldn't be this way, but
You're a
with like
shareholder.
weird predictions and things that I do like that, where I loaded up on puts into block as a hedge. And as a hedge, I was like, well, if I don't make any money, that's probably great because the market is just pumping. Um, but I think I enjoyed that more than like any of the other awesome earnings calls over this quarter, was just seeing that utter dismal failure and then the stock price action follow. And I'm like, it's deserved. Like they need to get rid of Jack. He just, and I'm seeing that's actually my favorite part, is not like making money's great. Seeing block go down in flames because I own it now. I'm rooting for that. But like the biggest thing is like seeing some bulls like just reconsider whether they even want to be in the stock long term. And a lot of other people where they say, and I don't think it's, I think part of it is unfair to Jack because it is price action is part of this. And we see this with Anthony Noto and SoFi. Like Noto's great, not perfect, but he's very, very good. And you know, a lot of the people that get mad at Noto, it's just because of price action, which you know, CEO can affect somewhat, but like over short term, like right now, like what could he have done? Like this is just what the macro that we're in right now, and so like it's a little bit unfair to Jack. He's been better than I thought, but man, people want him gone. And if he's removed, I'm kind of curious, Tanner. Do you, depending on who they hire, would you be interested in getting back in the block?
No,
No.
no, it's actually not. It's not the CEO that I'm worried about. I think that there is some diversification, let's call it, that you can get with Block due to the Dorsey effect. But
Mm-hmm.
overall, he is an unbelievable engineer. And I think that the innovation in Cash App wouldn't be where it is if it wasn't for Dorsey. Like his ideas, the way that he thinks is unrivaled. You can't create two, 10-digit companies without someone like Jack Dorsey.
Oh yeah, he'd be a great CPO.
Right. Sure.
Hey Tevis, do you think that Jack created Bitcoin?
No, I mean, I saw a post and I kind of laughed because he had a Satoshi shirt on, and they're like, highly doubt the person who's wearing a shirt that says Satoshi is actually Satoshi. But I mean, nobody can deny that he's a great engineer and a great coder. I wouldn't like extend that to a great CEO. It's just funny, like as you were explaining, Roy, your thesis, like I always struggle to get into the mind of a short seller, and like who are these people? I mean, they must be walking among us. Like
I don't know.
what the heck is going through the mind of a short seller? And then Roy talks about block. I'm like, oh, they are like literally among us.
And I'm usually not that way. Like the reason why I'm not, and you may not actually know this about me, I'm naturally tend to be pessimistic. And I think that actually helps me on the long side of it, just because I can see the other side. I can see where they're coming from. I can see when things are
So far,
feeling choppy.
$11.
Uh, but it would be very easy for me to shift into short seller mode. Like I've never shorted a stock. I've done puts on stocks. Sometimes on my own stocks that I actually hold a meaningful position, and that's just as a pure hedge. But sometimes it's just a company that I see as absolutely garbage. And I don't think Block is absolutely garbage, but like C3AI was one of these like 2 years ago where they went up so much and there was nothing there. And so I loaded up on puts, did very, very well. That's probably my best performing short, I'll say in quotes, because it's not directly short. Like it limits my downside, but no, like I like to play both sides, but I'm like 90 something percent long all the time, sometimes 100% long. And occasionally I'll find hedges or I'll just see an opportunity in the company. And I'll always be careful though. I won't do it ever based on price action. I think that's one of the things that people that are shorting make the mistake on, is they'll base it just purely on price action or valuation. And so that's where you get into the situation where you do something like where Palantir's at like $60 and you're like, oh man, look at the PE, look at these multiples, look at the RSI, the MACD, like whatever, these technical indicators, Fibonacci levels. I'm going to short this. And then it shoots to 110. And then you lose some yachts that you would otherwise have in your fleet. It's a sad story.
Yep.
I want to talk some more block here in a minute, but
like the most boring things you can talk about: Shift 4 and block.
Dude, honestly, I don't think Shift 4.
Baby.
I don't think
Shift 4 new. Are you buying more new? Fuck Shift 4. Screw that.
Yeah, let's do new.
Talk about that on your channel. Are you buying more new?
Yes.
It had earnings. It fell like 15%.
More than that.
Buy?
Yeah.
You purchased.
Yes.
All right. Why did it fall?
Foreign exchange headwinds. So US dollar's too strong for little old Brazil. And that made the comps for the business worse. But the business overall is growing like gangbusters. Like whenever you take out the foreign exchange risks. And so the way that I'm looking at it is that the macro will sway back and forth. And Nubank won't. That will continue to climb. And so in the last year, they've gained 20 million new members. That's 2 SoFis in the last year. And they'll probably do a similar number this year. Growing in Colombia, growing in Mexico, and a little bit more in Brazil. They are going to get out of financial services and go more into other products. So, like, for example, they offer a eSIM that their members can connect to that is priced better than the competition. And the only way that they can offer that is because the people that have to use that have to have a high assets under management. So they can price better than their competitors, even if they're partnering with one of those competitors rather than going in directly. So I just think it's like almost legitimately a perfect business, perfect execution, and the things that they can't control, they can't control. Like I don't know. They're right now they're a consumer business. They're starting to get into institutional. I think on the investment side, they're going to get really big into institutional, and on the business side, they're going to continue to expand. People are saying, oh, they might hit credit card saturation. That turned out to not be true. They grew their credit card book like a ton, like so many new credit cards this quarter. They grew the upper bound of their market, which is what they call ultravioleta. That grew by like 132% year over year. Just insane growth in the areas that people want them to grow in. And then they're even moving down market, and they're not even taking the credit risk. They're just offering them secured prepaid cards. Like, the business is perfect. The execution is perfect. Why would I not buy?
Yeah, throw this chart up that I put up here too. So I agree with you, Tanner. I'm actually annoyed because I was buying. I put an order in to buy Leaps, lost track of time. Didn't fill. Came so close to filling, they didn't fill. But yeah, this is the real to USD, and it bottomed there at the very end of the quarter. And so what I think that they took like what would have been a dollar neutral 58% year over year growth rate to 22%, which is it's massive headwinds. And then we have a little bit of stability that came to Brazil, but it's always like their economy is very, very cyclical. That's just kind of the way it is, and the real does this from time to time. But one of the other factors has been an incredibly strong dollar, and that's just kind of been the case. But you look at what Trump did in his first term in office, and he took some deliberate steps to weaken the dollar, and he's made comments about weakening the dollar, and it looks like some of the steps that he's taking, or at least considering taking, would also weaken the dollar as well. And all those things, there'll still be some headwind. The real is like, it's just like they'll always show better dollar neutral almost every single quarter than under the real. But I don't think we're going to see another quarter like this where they see just absolutely insane headwinds. And so the market is looking at Nubank right now, and they're just saying, okay, Warren Buffett, he sold some a while ago, and now it's growing 22% year over year. Wow, that's terrible. It shouldn't be valued at this. Versus like that's all currency stuff. So otherwise it'd be at 58% year over year growth, and no one would be complaining.
Yeah, I was talking to Chris this morning. He goes, "Yeah, but the purchase volume was a little bit disappointing." I was like, "That was also marked in US dollars." And then he goes, "Really?" And then he looks it up. He goes, "Oh, well, that's exciting."
Yeah.
Like, how do you value a company that, like B-dubs I saw in the chat, he said, "Well, you can't like FX is real. You can't just take it out." I get that. But how do you value a company that their own KPIs are growing like gangbusters? Okay? And that their potential to return or have more tailwinds will be seen going forward. So whenever that does happen, they're going to have potentially 30 million more members. They're going to have whatever percentage of those members be primary banking relationships. And then from a tech perspective, like Tevis, you'd be so excited. They write all in one code that they can easily, deploy into new countries. All they need is, a like regulatory approval. It's just, they're just set up to succeed, not this year, but 5, 10, 20 years down the line. They are still like going to be placed first. It's crazy. Now, let's go back to Block really quick, because the shorting.
Let's not.
Nope,
my problem
I want to
is
go back to Block.
on new. Isn't there always going to be an FX risk, like as an overhang to investing in it? Like, how should new investors be thinking about investing in Nubank when you're always going to have drawdowns as a result of the FX risk?
Very true. So Nubank, or sorry, for Block, let's talk Block for a second. The shorting it, there is a little bit of competition on the long side that might end up disagreeing with you.
He's coming in. This is why I wanted to talk some Block and Jack Dorsey, because I knew it would summon Esteban. So you guys are welcome. Esteban is here. Glad
you
to
guys
see
can thank me. I called him directly on the phone.
I'm laying on the couch watching a pizza show that Slice just put out about a pizza place I may actually have to travel to. And I get a phone call from Tanner disturbing me and telling me that Roy, my buddy, is doing something that's crazy.
What's that?
Shorting Block.
Oh, no, I've already made the money on that. I was up like 130% or something. And I'm like, good enough. I'll take the profits.
Good.
And if Block rides up again, I'll probably do the same thing.
I don't know if that's necessarily a good idea.
Is Jack Dorsey resigning? Because if so, then you're right. I'll buy call options instead.
Look, I'm not a fan of him, okay? I am not a fan of their stock-based compensation. I think I've been very clear on that. I think it's egregious what they shell out, and that has been one of the largest bases why I was never really a shareholder. Is just they were not profitable, and in 2022 they paid 1.07 billion in share-based compensation, and in 23 they paid 1.28 billion in share-based compensation, and they were, depending on what metric you look at, I like free cash flow because it's harder to dispute because you don't have to worry. I'm not going to get into it, but it's easier to manipulate net income. They were not free cash flow positive last year, and yet egregious share-based compensation. But you can't say that this company is not growing a ton at the moment, and their margins are pretty good, and the forward EPS is interesting. I mean, this is a company that just did 24 billion in revenue.
What forward EPS are you talking about? Next year or?
We'll get there real quick. I'm actually going to share this. So hold on. Let me just do the 1 moment. Bear with me. No, I didn't have time to prepare, so I'm doing all this on the fly. But if you want something that I think is not great,
there's a lot.
I think Costco is in for a world of hurt.
So I will say, while you're pulling things up, like I would not have expected, based on those quarter results, for Block to have fallen that far. A lot of that was it was just like a lousy day on the market anyway. Like PayPal, which is not any different than what it was on Monday, like it sold off like 2.5%, 3%. So on a normal day, like maybe Block would have gone down like 10%, maybe 15%. This wasn't a normal day. So I do think the sell-off was a little bit more aggressive than I expected. And that's one of the reasons why I didn't mind initially taking some profits and then just taking it all off the table when it kept getting more and more profitable.
Listen, I get it.
Are you building an entire spreadsheet over there?
So while he's doing that, let me show you this. This is the funniest thing.
Yeah, I laughed at this too.
Yeah. You have Yengus put this out, and I was like, oh man, it's right there. Like his shareholder letters are just weird. And so our product goals in 2025 and beyond are to increase access to the global economy for everyone, which is weird because United States, but okay. Increase.
Well, hey, Roy, they were in they were in 4 countries for Cash App, and then they went down to 1. That was in 2024. They got out of Spain. They got out of what was the other one?
It wasn't UK, but it was in Europe.
Yeah, it was like a couple countries in Europe, and then it was like the Falkland Islands or something. It was like,
yeah, and 3 is good. Increase automation, great. Increase openness to earn trust and maximize customer flexibility. What in the world is that? What are you doing, Jack?
From the ex-Twitter CEO.
Oh, my goodness, dude.
Bro, the guy's got a beard down to his belly button. You think it's going to make sense on those notes?
No, I think there's a fair chance that he's not in his most lucid state of mind when he's writing these epic long, not rants. I don't even know what you'd call it. Like he's basically Alex Karp if Alex Karp wasn't as smart and was on drugs.
All right. I'm not going to disagree with any of that because we all know how I feel about that. But look, numbers are numbers, and they replicate what the business is doing. And please excuse my sloppy. This is on the fly. It's actually annoying me that this isn't like beautiful. But in 2024, their revenue grew 10%. Not great, but not bad. But what did happen is profitability, huge increase. And not just net income, because you have tax implications, that type of stuff, but the cash from operations grew by almost 1,600%. Okay. They did 1.7 billion in cash from operations and free cash flow of $1.5 billion. Okay. This is a company that is no longer losing money. And that was a big complaint for a long time of mine, that I didn't understand the valuation. I didn't understand why people were excited about it, because they continued to lose money and they kept paying their executives a ridiculous number. But this is a company that has turned, and it looks like they're going to get more profitable. Their gross margin increased to 37%, just over it. And you have a fairly good profit margin that could continue increasing. And when we look at where the analysts believe that this is going to go, which I'm going to bring up right now. So earnings.
We're not talking SQ. We're talking XYZ.
XYZ. So they're projecting that Block is going to do $4.46 of EPS this year. It's trading at 18.5 times this year's earnings, with almost 33% earnings growth year over year. And then next year, 24%. The following year, 22% EPS growth. This is trading at 12 times 2027 earnings. That's incredible valuation. And when I look at the revenue growth, it's still going to grow in the double digits the next 2 years. So what that tells me is that their margins are going to expand, because the EPS run rate is much faster than the revenue at this point. So they're really going to be monetizing what they built. I'm telling you, this is not something you really want to start shorting at this level where it is.
Well, not right now, no. But if it goes up to 90 again, yes, absolutely.
I don't even think 90s. I think at 120, yes, maybe. 90, no way. No
Easy
way.
90. Yeah, 90 is ridiculously overpriced for where it's at. Now, 2027, you're doing right because you're picking a number that's further out and it does get passed. But like one of the things that made it really easy for me to enter there was, they had these two massive fines leveled at them shortly before the administration changed over, which is almost all of their net income for 2025. And the craziest thing to me was like looking at that, and there's a flurry of them. Like Block wasn't the only one caught up in them. PayPal got one. Did PayPal get one of them? I know Robinhood did as well. But I was like, okay, all these other tickers, like the market's like, oh, okay, we'll take off, 5% or whatever. Block just stayed right there, and I'm like, now's the time. And I was a little bit late to it, but thankfully it didn't dip too much, and I just leveled up because I knew like you can't basically have a whole year lost profit and questionable leadership at best. I do agree that there's some good things. Margin is improving. That there's an opportunity if there was a credible CEO at the helm. I just don't trust him. And like my question to you is, so you projected out to 2027. How many titles does Jack Dorsey acquire between now and then?
I don't really care. You can acquire 10 of them. It doesn't matter. Look, I never said that I like management. I never said I believe in management, but I do believe that they have a product that people are using, and in a administration that's going to be bullish crypto,
Yes,
in a regulatory environment that is going to be less on the attacking and more being inclusive to crypto, you have to think that Cash App is going to see a larger uptick. There's a lot of things that can go right this year and next year. And right now, the numbers are saying that this is massively undervalued.
I think the weird thing to also consider for Block, whenever comparing them to crypto, is that a lot of the times in these run-ups, the first order of a crypto run-up is Bitcoin. And then the second and third orders are the sort of Ethereum, Solana type names, and then like the altcoins.
But you don't need a run-up in crypto. You just need people to believe it's going to stay.
All I'm trying to highlight is the fact that they only work with Bitcoin. So the problem with the Jack Dorsey behind the helm is that he has so many like moral or like moral objectives that he tries to stick with that stand in the way of profitability. Like Cash App not being a place where you can buy crypto, but you can only buy Bitcoin is a very weird, thing.
Yeah. Throw this chart up real quick. This is from Jay or Yevyengus. And he entitled it, he's a bull, but he said, nobody told Block that Q4 is exceptionally strong for crypto. Like, we know that what Robinhood did. Robinhood was like, oh my goodness, like this is the best. Coinbase did great. All these other companies did great. And the problem is Jack Dorsey. He is a Bitcoin maximalist. I think Bitcoin is very important. I think it's right to be.
You know why he is, right?
What's that?
You know why he's a Bitcoin maximalist, right?
You think he did not create it?
Yeah, Steve, what are your thoughts on that?
No.
He is Satoshi.
No. But
Hal Finney is Satoshi.
It's a liability at this point. And the thing that really I question, and I don't get this also with PayPal as well, and I hope that Investor Day shines some light on it.
I got to tell you, PayPal, I may come back in.
Hold on one second. We'll go to PayPal in 1 second. But is stablecoin, like this is the year of stablecoin. There's a huge opportunity because of the SEC shift. There needs to be probably some regulatory clarity on things like that. But there was a article that came out shortly before Block reported, and it was on like them increasingly using stablecoin and building the digital payment rails. I'm like, dude, this would be fantastic for Block, also for PayPal as well. But we've seen like limited impact on PayPal side and no indications of this at all for Block. And why? I think for Block, it's because the dude's a freaking Bitcoin maximalist. He doesn't care about stablecoin. Others do. They know what they're doing. They would actually do that. It'd be great.
Can I give you another side?
Sure.
So outside of Cash App, okay, Square, and I have to go through the numbers again. I didn't go through everything yet, but you have a macro economy that is likely to get stronger over the next year or two. You have GDP, which should grow, and you have a Fed that should be cutting rates. Even though Powell is on the wrong side of things right now, I think that they're going to cut rates more than 2 times this year because rents are still sticky, and the only way to get rents down is to bring rates down. It's the only way at this point.
Well,
So,
especially when they find there's no gold in Fort Knox, that's going to bring
well,
inflation.
that's going to be something else. But in an environment like that, you have to think that the businesses that utilize their application for the terminal through Square and all the underlying metrics that go along with that, their take rate should go up, the amount of processing fees should go up because more money will be spent in the economy with GDP going up. So they should see more revenue coming in from those lines of businesses also.
I think
and that could be the case. Can't argue.
Can we switch topics, please?
Yeah.
Tevis feels so uncomfortable right now.
Dude, I don't want to talk about stupid Square. Like, who cares?
So can we talk about something for 2 minutes that is so grossly overvalued that I found today? That's disgusting.
PayPal? What is it?
Costco.
it is, but you know what?
So overvalued, it's disgusting.
It's not because you're paying for this is like saying Apple is overvalued. You're paying for
the. He just said it's not.
What?
You just said it's not overvalued.
No, what I'm not buying. I love Costco. I'm not currently buying it because I think the valuation is stretched, but there is reason for it. It's not insanity.
Oh, this should be good. What's the reason?
I think that the user base is sticky and they probably have customers that will stay for 40 plus years.
Do you shop there, Steve?
I love Costco. I'm not allowed to go.
There you go. That's
Wait,
the bull case.
I love Costco because
Did you say you're not allowed to go?
My wife would rather go by herself than with me because the cart will get too big if I go.
That's literally the bull case, dude.
It's not the bull case.
You just highlight it's a moat, stickiness. People.
It's not. May I show you a few things about Costco?
Yeah, for sure. But Tevis, do you see this right here?
Yeah.
What's that top one? There's a gray one. What is that?
Shift 4.
Oh, okay. All right. I'll put it down.
Yeah. They're all going down, aren't they?
Well, I mean, all of them are going down, but I mean, like Shift 4 is kind of consolidated.
What was the other one on that list? Yeah, look at the other one. Square is on that list. The one we've been talking about for like the past 50 minutes as being Roy's short. Roy's number one short candidate is on that list, along with.
I'm gonna change Roy's mind right now.
No.
All right. Costco is operating at a freaking 3% profit margin.
Is there any way that you could change the resolution on this? This is such a waste of the screen.
Hold your horses, all right?
Steve, why is Costco in a chart with CRM and Cisco? It doesn't do any tech.
I'm going to show you some other charts too. But because it has a market cap of $460 billion, which is bigger than Salesforce and bigger than Cisco and almost as big as Oracle. And this company generates $5 billion in free cash flow compared to Salesforce at almost $12 billion, Cisco at almost 13, and Oracle at almost 10. It is crazy that Costco is trading at 92 times free cash flow and 60 times profits. It's insanity. It's insanity. It gets worse. Okay, it gets worse. So now we're going to look at it against its peers because I knew you were going to say that. So here it is against Walmart and Target. Chart on, Tanner. Let's go.
It's so funny. Go ahead.
So here you go. This is Costco versus peers. So Tanner doesn't have an aneurysm about who did you put it in with Cisco in this.
That was Tevis. Well, I don't know why I'm getting the brunt of this.
Yeah, Tanner.
You're on the tap. I'm sorry. But you look at
have
Costco,
a high voice like that, Steve. You got it. You nailed it.
Costco has a cash from operations margin of almost 4%, a free cash flow margin of almost 2%. Look, these are low yield businesses, but at the end of the day, Costco is the worst in almost every category. And then you look at forward EPS, it's trading at 57 times 2025 earnings and 46 times 2027 earnings. You could go buy Walmart, which actually has around 2.75% more growth on the horizon on EPS at 36 times this year's earnings and 29 times 2027 earnings. There's legitimately no reason to own Costco here when you're not even getting paid a big dividend is sitting there. I mean, this is crazy. So the last chart I'm going to show you is going to really put things in perspective. Because when you buy Costco or any other investment, you're taking capital that you could have invested somewhere else and putting it in that investment. So,
like hymns.
Right, like what he just said, hymns.
Like hymns, yeah, exactly.
Sure. So Costco compared to Target and Walmart, but also the Magnificent Seven. Why on earth would you pay 46 times a forward PE versus paying 15 times for Alphabet or 20 times for Meta or 22 times for Nvidia? And those three all have more than 30% growth on the horizon when Costco has 23%. This share price is crazy and the market cap is egregious. Look at Amazon. Amazon's trading at 24 times 2027 earnings with almost 47% EPS growth in the same time frame that Costco has almost 24%. It's
Do you have top line? Do you have top line growth here, Steve?
No, this is just expected EPS over the next 3 years.
So, Steve, Costco or Palantir, which valuation is more egregious in your mind?
I'd have to bring up I'd have to do Palantir real quick, but Palantir is most likely.
It is
In
obviously.
fact, yeah, it has to be Palantir. Palantir is trading like 200 times earnings or something.
Yeah,
well, no, I'm not talking about multiple. I'm talking about in your mind.
Oh yeah, Costco's recession proof. Cool. How about this? Are you really worried about Alphabet not being recession proof when they do $101 billion in profit? Come on.
I mean, B-Dubs has a point. When they find out there's no gold at Fort Knox, Costco sells gold bars. It's literally recession proof.
There it is.
So true. And also, recession comes around. People still go to Costco, but everyone's going to cancel their Microsoft Office subscription. So Microsoft's a little in danger.
Oh, yeah. I'm really worried about the biggest companies in the world getting hit by a recession, considering Alphabet and Meta are the only two places for companies to advertise. I'm really worried about it. I'm really worried about those companies. I mean, come on. Crazy.
Now, we like to have fun with Steve. Steve is the greatest investor amongst any of us, aside from Roy. Roy's the actual best. But it is funny how, like, I can say, I know 1,000 things to say to make you hate it because you pick up on like 0% of the sarcasm. So I love whenever you're here, Steve. I don't know why you're not coming on the weeklies more often.
I was watching the pizza show.
Well, stop watching the pizza show or whatever.
Show is relaxing. It's nice.
You just watch somebody cook a pizza in front of you?
No, Slice. I didn't see this episode. Slice just put out a new episode. It was really good.
There's a pizza show by a network called Slice.
Well, it's the unit that put it out. They've had a lot of people
hints down there, man. You got to get your networks in order.
I'll send it out to you. It's on YouTube.
Speaking of cooking shows, when I was in Las Vegas, I did Hell's Kitchen.
Oh yeah, you went to that.
I actually went there when I was in Vegas.
Yeah.
Right across from Caesars?
Yeah.
Yeah, I went there.
Yeah, it was fun.
It was good. But no, in all seriousness, I think today is a massive buying opportunity. I'm not worried at all.
What did you buy today, Steve?
I actually bought more block.
Yeah, I could have told you that.
Is that it?
For today, yeah, I bought more stuff. I bought more Nvidia yesterday. I think Nvidia is going to tear the roof off next week.
I mean, Joby was up today.
Cool.
You buying that?
You have fun with that.
Roy Tevi, private chat.
No, have you guys looked at CapEx spend at all?
For which companies?
Of the good old Joe?
Meta, Amazon, Google,
of course,
Microsoft. I mean, they're adding $120 billion in CapEx spend this year, and Microsoft's year ends in June. So they're going to have to announce a new plan when Amazon's halfway through. Amazon's going to spend $104 billion this year. So you got to think Nvidia is absolutely going to crush this quarter and crush all of this year because these companies are not taking the foot off the gas. They're increasing the spend. And we could see increased spend next year because Microsoft is going to set the tone with an even bigger, most likely, spend than this year.
I love where Nvidia falls as far as the earnings cycle, just because we've seen, I think, the last 4 earnings cycles, there's some wobble in the market that hits either early in earnings or maybe just before. And usually it's still wobbly at this point. And it is right now, but like we had a period of strength. And then Nvidia comes in and Jensen saves the day. And I think my guess is that this wobble that we see in the market will continue maybe until Nvidia reports. And at that point, I think, we're fine. The market will realize, oh, yeah, we're in a bull market. That's right. And people see it. Oh, yeah, buy the dip opportunity. Greed will return, but not all at once in the market. There's a lot of top indicators. So this pullback is actually a really healthy thing.
Tanner, throw this chart up. I mean, the spend this year on CapEx, and this is just from these 4 companies.
Yeah.
It is insanity. And nobody really looks at Oracle. In Q2 2024, Ellison said that they're going to spend $100 billion over the next 5 years on data centers because they're oversubscribed. So this chart that I made doesn't even take into consider Oracle or other companies like that. So, and like Roy just said, the best thing about where Nvidia falls, we already know what all these companies are going to spend on CapEx. And we know what they spent on CapEx. And with what they spent on CapEx, it's pretty much a zero-sum game that Nvidia is going to blow it wide open this quarter on profitability and revenue. I mean, I think it's going to be big.
Yeah. I'm super excited about Nvidia. I'm even bought more, even though it was the largest position that I had, and I'm very, very excited for Wednesday. I cannot wait, guys.
Yeah, neither can I, because I have a bunch of options on SMCI.
Yeah?
It's after the bell?
Yeah.
After the bell, yeah. Dude, I called SMCI at 33. I bought shares, naked options, and spreads.
And?
I wouldn't.
I mean, I'm up quite a bit on them.
Yeah.
What's the exact dollar amount, Steven?
I'm not going to say a dollar amount, but I think my naked options are up like 380% or something like that.
Wow.
In like 3 weeks.
Very nice. Very nice. What else are you very interested in?
The bigger going to get bigger.
Are you buying Serve?
No.
You were, weren't you?
No, I thought it's interesting, but I want to see it come down to like $4.
Okay.
No, I mean, look, I think the bigger going to get bigger. I really like Alphabet here. I really like Amazon here. I mean, stuff
Google?
that everybody knows I like. There's nothing new.
Google?
Dude, it is such a screaming buy. 101 billion net income this year. Like, people are going to be bearish on a company that's doing 1.9 billion in profit a week. Like, what are we doing here? If you can't invest in a company that's doing 1.9 billion in profit a week, what the hell do you invest in?
Yeah. I don't need to tell. I don't know how many times I'm going to tell you. I don't like that comparison, but but yeah, I am also bullish on Google, but it's based on the valuation, how much you're paying for it, Steven.
Paying 15 times 2027 earnings. It's disgusting.
Yeah. I'm bullish on Google. I'm bullish on Amazon, Nvidia, obviously. I think that it's really hard right now in the market to find these companies that are going to 2-3x in the next year. I think really what I'm focused on is buying companies that are just going to compound at like a 30% rate. That's really what I'm just looking at right now.
This is not a stock pickers market anymore. The easy money from last year has been made. You're not going to find companies like Palantir, Hims, Robinhood. Those days are over. I think you're going to see a retracement in a lot of companies, to be perfectly honest. I mean, there's a lot of companies that have valuations that are egregious and should not be there. And then you have companies that are very undervalued. So we're going to say, like Rocket Lab, like you're not going to find stuff that are going to expand that much in a year. There's just not opportunities like that this year.
Not as many.
There's some, but yeah, not as many. I'll agree with that. Tevis, you were going to say something with Hims?
Oh, no, I was just going to say to Tanner, like if you're looking for compounders at 30%, and HIMS is your perfect candidate.
Yeah. Honestly,
dude, I'm not anti HIMS. I just don't. Bro, I didn't even realize why they fell today. I found out later that there's a shortage list, but like I would have been oblivious to why they fell 25%. I don't want to own a company that I don't know why they fall. They get cut by a quarter of their business.
Well, yeah, dude. Like you don't know because you're on the outside, but the moment you start reading about it, it's like the first thing you'd learn about HIMS.
Yeah, but it would be my only company that I would have to read an entire industry about to hold one business. Where my other 16 businesses, I read, tech news, and I'm like, all right, I'm good. Like,
yeah, it's really more of a tech and data play, and it's increasingly so. Like they had 2 acquisitions that they announced
this week.
Yeah, and it just they are. I don't know this for sure, Tevis. Like you can correct me, but I feel like they do acquisitions as good as like the Robinhoods and the Shift4s. They integrate them well. A lot of them are on the back end, so you don't like see them visually as a customer necessarily. MedMatch is an exception, certainly, and I think this blood draw company will be one. But the peptide,
it's all vertical integration, right? Because they bought the 503B facility back in the winter, like in December, November. And then the peptide facility, and then the at-home lab testing, like it's all vertically integrated to build towards your personalization mode. And they're paying it all cash.
And Kelly bought HIMS today too, and she's a Canadian. So I mean, that should be good enough for you, Tanner.
Yeah, I see people in chat going, "You could just learn." To be honest, I understand reading the articles and taking someone else's opinion of those matters as quote unquote learning. That's not really what I'm necessarily talking about. I understand the industries of, semiconductors. I don't understand the industries of dick pills. And
so the thing, go. I'm sorry.
No, I'm just. I'm sure they do well. You don't need to hold every single business that could potentially go up. There's going to be a lot. Shift4 is going to do great. All these companies are going to do great. I'm not necessarily looking to buy into a company that has already ran up so much. I don't think that that's necessarily, a meaning for a good buy or something like this.
So HIMS at 50 is kind of like Rocket Lab at like 12, where it'd be easy to look at it and be like, hey, I missed it. And there's still, I mean, it's a long-term thesis. It's not just it's undervalued, I'm buying it. It's the execution, what they're able to do in the industry. And they basically are doubling down on the compounding. Myself, like that was one of the things that I really liked when I actually took the time to look into HIMS. It was a lot simpler and cleaner play, a lot more understandable than I expected. There were still things that I was like, okay, thesis is very clear. There's a lot of intricacies that I didn't grasp right away, and that's why I was very careful with what I said. And I'd oftentimes misspeak and say things like that there was an oral GLP-1 solution that was theirs, and I was like, no, that wasn't it. That was, just had a lot of things wrong, and thankfully got them corrected. But I think it's actually easier and more straightforward. Not anymore with the loan platform business with SoFi, but before that, I think SoFi was a little bit more of a challenging play to really understand that full thesis versus where HIMS is. But I see it as a data and analytics play mostly with that compounding, especially, and there's some nuances beyond that. But no, I totally get not investing in something that you're not into. That makes sense.
You could have bought AT&T and got paid a big dividend and made 57% this year.
Could have.
AT&T's up 57%. I was saying buy it when it was at 15. Nobody listens.
I mean, his Christmas gift is literally up 100% this year, Steve, and that's only after falling 25% today.
All I'm saying is a lot of these companies are going to keep coming down.
Steve, why did you not give me AT&T instead of Block?
Because I really do think that we're going to do good on Block.
Well, I will credit you, though. I don't know if Block would have been top of mind for me as a potential hedge and making a lot of money as a result of it if it wasn't for that lump of coal that you gave me. So thank you. That coal compressed that turned it into diamonds.
I mean, it's better than what Teva's got.
It is. I will agree there.
I got
actually
nothing, man. I got coal for Christmas this year. I don't own any
next
of the
next year. We need to put a rule in place. You have to be a shareholder of whatever you're gifting.
Yeah.
Meaningful, at least $1,000.
Like
yeah,
you have to be, and you can't just go buy one share just to gift it.
Yeah.
Like ridiculous. Like I gifted something I'm a shareholder of.
And I feel bad because Unity was up 34% in the past 5 days.
Oh, it would still be down.
Right stock, wrong year, man. Right stock, wrong year.
You know what I really want to buy, but I can't bring myself to do it? Take-Two Interactive.
Because of Rockstar, because of GTA 6?
Yeah, I think that you're going to, I don't know how much you've really looked into it. Like, I think this company's overvalued. But GTA 5 has been out for a decade, okay? And the big difference now is GTA 6, and I have no idea what they're planning on doing. There's a lot of rumors going around, but if they have some type of cryptocurrency that is backed by something, I don't know how they would do it, but that you can convert your cash into it and actually get paid to play the game, and they take a percentage of when you cash out, I mean, this could be revolutionary. And they're already talking about private servers backing things with ideas like that. But the amount of money people spend on those shark cards for cash in the game and the amount of money that people spend on this is insane. And GTA 6 is going to be potentially the biggest video game of all time.
It might. Yeah.
Yeah, I just don't like.
They really pump the microtransactions. We don't know what that game's going to look like. But
I think the microtransactions is the most interesting part for me. Yeah. But I don't know. I haven't done enough research into it, and I hate Take-Two's valuation right now. But I think there's a lot of potential.
It's just not a big enough industry for me. Like, everyone's buying this company for a single game, and I understand that they're more than a single game. They have a couple names, but like everyone is buying this for GTA 6. And like I get it, but it's also like a small problem that is being solved. Like I don't know. And also like when's it coming out? Like I don't know. It's
coming out in October.
They have a date set?
The rumor mill is October.
Yeah. There was like a leak on the gameplay.
Yeah, I saw gameplay and it still looked like the map wasn't built.
You have to pay microtransaction to get the map.
Yeah. No, I'm just not into those names.
What would you like to be into, Tanner?
I'm into what I'm into. Actually, here, wait. I'm not going to talk about them right now. I'll talk about them next week, but I'll type in to chat what I'm actually looking at.
Is it Shark?
Those are getting me really excited, especially
stop it.
Especially the latter one.
Why is that a private chat? You're using the private chat privilege. This is not private chat worthy.
Because I don't want to talk about them yet because I'm not ready to like. I don't have good DD on them. I'm just excited about the potential of them.
Here's what you do: is you just say, "I'm looking into them." I did that with Ibotta.
How about this? One of them you completely missed the boat on. The first one you typed, you completely missed the boat on.
Are you out of your mind?
I'm not sure about that.
You completely missed the boat.
They
can't compete with.
Ladies and gentlemen, we're wrapping before we go any further.
I won't say the names, but they cannot compete with the bigger competitor.
You fucking guy.
And
you better be careful, or you might be
writing off. They're never going to gain on the other side.
You better be careful,
no man's land,
or you might be sued.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Bye for now.